The views and opinions of this program are those of the hosts, guests, and callers. There is substantial risk of loss in trading futures and options, which you should carefully consider prior to trading.
Make sure to subscribe to the Market Talk YouTube channel. You can watch our latest interviews with top market analysts in the country, find bonus content, and much more. It's easy. Just go to youtube.com/@MarketTalkAg and hit the subscribe button. Or you can search for Market Talk Ag on YouTube.
Well, markets closed for Good Friday, heading into the Easter holiday weekend, but of course, a lot of fireworks on Thursday with the prospective plantings and quarterly grain stocks reports out from USDA. Also, we got end of the month, end of the quarter, plenty of positioning in these markets, and a lot to discuss and think about here through a long holiday weekend. And I love report days because we get an opportunity to have some fun here on the show. And we're going to do that with a roundtable discussion here on today's Market Talk. Joining us for the conversation, Dwayne Bussey with Bolt Marketing and Christy Van Sheeseth with Van On and Company. Dwayne, Christy, thank you both for joining us. What a wild day that was on Thursday with all of that data dump from USDA, wasn't it, you guys?
Yeah, it was exciting. Thanks for having us.
Yeah, it was a lot of fun being a producer myself with maybe a whole lot of old crop corn I shouldn't have. I was thrilled to see that report on Thursday.
Well, that was the big headline number, and that's probably where we should start. 90 million acres of corn, definitely below expectations, down from USDA's forum numbers, down from pre-report estimates. I guess instant reactions from you guys. Christy, if you want to start, 90 million acres of corn, definitely seemed like the corn bulls were happy after that number.
Yeah, I don't know if that sticks. That number sticks. I might be throwing myself out there, but that's a low corn acre number. I think with the sheer amount of dry concerns you have in so many areas, North Dakota, South Dakota, Minnesota, Iowa, Wisconsin, Nebraska, all lit up on a drought monitor. I don't know if that corn acre really sticks. You're also looking at the core 3 of corn, beans, wheat being down quite a bit year over year. And so I think that you're possibly seeing more acres be put into this dynamic. And I think if people have the choice and they have an early choice, I do think that you're going to see some more corn acres. The nice thing is this is the number we have for a little bit. And I'm really hoping that the market runs with this number to give us some opportunity to do some corn marketing. I do think that many people are behind on corn marketing just because we're so far off of these prices. I think a lot of people didn't think they were going to have the yields that they had, so they have more bushels around than they anticipated. And I think people have been slow to really start on next year's crop marketing for corn, beans, and wheat. So hopefully this is a gift. Hopefully we get this rally together. But I saw that number. I was very happy. I was very concerned we were going to see a very high corn acre number. So I'm glad that's what we got.
Dwayne, your thoughts there. You kind of alluded to it at the beginning. From your producer perspective, it sounded like you were happy that this corn number was kind of a gift as well. I mean, your thoughts?
Yeah, exactly. I think we're going to use the term gift quite a bit, actually, because it feels like it. So, that report comes out, there's a lot of numbers flashing, and you're trying to look through it really quickly, right? And I remember seeing the corn acres at 90, went, oh, okay. Then I scroll down to soybeans and assume that's going to be close to 90, right? Well, that's not going to be good. No, it wasn't there. And I look at wheat. No, it's not there. You got to keep going and going. And finally, I look at total principal crop acres, down 6.3 million. And I start to grin and go, I don't know how you lose those acres, but I'm really glad we did. So back to my term, a bit of a gift. I think Christy's right. I think come June 30th, we find these acres. Now, this is a more bullish setup because essentially we basically lost some corn stocks. We lost corn acres. We're now going to start to trade U.S. weather, and the funds are short. So we could have a significant rally here, but I am not changing my new crop marketing plan targets because of just what Christy mentioned. I think we find these acres later. So I'm still going to sell from 474 to 550. I just feel like now it's more of a realistic marketing plan instead of a wishful one.
Yeah, no, that's a great point. Well, I'm thinking of this acreage. I mean, we were down over 300,000 in many of the key growing states, I-states, Minnesota, South Dakota, as you look through more of those numbers. And I look at a spring wheat number that's a little bit higher, a Durham number that's a little bit higher. And Dwayne, I mean, you mentioned this before we started, some of the dryness in, say, north central North Dakota, maybe some acres are going to spring wheat there. I mean, your thoughts on that?
Well, that was my thought, is because of the weather more than anything. It's not like spring wheat's penciling out great because of the higher price or anything. It's not a bad price, but you get to our producers up there in northern North Dakota, they're exceptionally dry right now. And if you are dry in that area, you tend to think, well, if I can get spring wheat planted early, which it looks like they will, I get 1 or 2 shots of rain in the spring, I can get a crop. Where if I wait for beans in a La Nina year, they might peter out and I might not get a crop. So I think that's where the spring wheat acres came from. But I think we really need to bring up a point too, that it is early. This is just the March intentions report. I always giggle being in Northeast South Dakota farming that my intentions usually tend to change after this report because it moves the market. So a lot of moving parts yet going forward.
Yeah, definitely. Christy, your thoughts too on maybe some of those acreage shifts. I mean, you're up in the Northern Plains, upper Midwest in Minnesota. I mean, did that spring wheat Durham number surprise you? Your thoughts there?
Yeah, it surprised me for the wheat number. I mean, not that it's that drastic. There were some other numbers that surprised me more than that. But when you look at the wheat number, wheat hasn't really been able to catch a bounce like you've seen some of these other markets. I think you're sitting on a lot of wheat for so many people right now that they need to play catch up there. And I just don't think, I think they've been burned by it these last 2 years with all the information out there trying to lean friendly with the Russia-Ukraine stories. And they can't get it. You've had farmers make record yields on spring wheat and it's still not penciling because of discounts, because of basis level being so poor. So I think guys are kind of so burned by it right now, they just don't want to go to it. So I was a little bit surprised by that. Another number I was surprised by was the fact that USDA currently has Minnesota dropping 700,000 acres of corn. We are really dry in Minnesota, and I know it's early, but I had spent some time in southern Minnesota at the beginning of the month. And granted, we got the snow system through and got some moisture. But as I was driving around, I was like, it is dry. Like, it is really hard to see southern Minnesota soil look dry, right? It's such a rich soil. It's so nice to look at. And it was really already just not there. And so I think the lack of moisture you're having is giving the ability for people to get planted early. Before this snow system, you really heard a lot of producers talk about rolling the dice and putting a crop in early. I think the snow system was a gift in a couple different ways. One, we desperately need the moisture. If it takes it in snow, whatever, I will take it. I'm not happy about it, but we need it. And two, it just pushed some people back to some more realistic timeframes for planting purposes. But you see the extended forecast now for the 8 to 14 day forecast turning back to warmer for many areas. And so I think you got that short shot of moisture, and now you're going to say, hey, as long as we don't see massive rain, it's going to be an early spring, I think. And I do think you're going to have that be aggressive. We go to Omaha this weekend, so I'll be real curious to see how the drive down there goes, because you're going to be driving through some really, really dry areas.
Well, I want to ask on the corn side from both of you here a little bit more before we segue over, talk a little more on beans. I feel like you're both fairly on the same, train of thought here when it comes to corn marketing. I know May corn, I got about the 50-day moving average on Thursday for the first time since I think October. You look out a new crop. So, I mean, how aggressive are we getting here? I would have to think old crop, it's time. New crop, I mean, your thoughts there, I guess, Dwayne, you want to start? Any thoughts here for folks looking at their corn marketing right now?
Yeah, I think kind of for me, I think I already talked about the new crop, that I'm not changing. I'm all selling from here straight up on scale up selling, but I'll touch on the old crop a little bit. I was always kind of targeting a rally to 450 in the nearby and then go out and sell the carry in the market, hopefully out to July. Well, we better hurry up and get to 450. Otherwise, we're going to be on the July contract and there won't be a carry in the market. Had a few guys call and ask, what about basis now? And I'm like, well, if it wasn't good before, it's probably not going to be good as this futures market rallies. If we get a futures market rally, it's mostly because the funds are going to be getting out of short positions, not because we're running out of corn, especially old crop corn. So I'd say if you get to that 450, which we're not far from, you better start selling that old crop, or maybe you just sell all of it and then you can always buy it back on the board. Because like I said, I think the bigger rally you get, Jesse, I'm just worried, at least in my area, the basis is just going to kind of widen out.
Christy, your thoughts, old new crop corn?
Yeah, I could totally geek out on stocks numbers right now. There's so much information out there when you break that down. But when it comes down to old crop, we did move on marketing today. So we moved on 10% of old crop corn marketing. Do we wish there was more to it? Yeah, we definitely wish there was more to it. But many of these areas have seen a basis push in corn over the last probably like week, 2 weeks, just because of lack of movement of corn. We have some road restrictions coming on. People are unhappy with the price. And so there has been a basis push in a lot of areas. So when you break it down to the stocks number, we actually utilized first quarter the most corn we have used in recent history. So that is a positive here. But on the flip side, you're sitting on so much corn in the farmer's hand that I really do think that eventually in the next 5 months, we have a lot of corn to sell. We have almost a billion bushel more corn right now than we did a year ago. And so the selling pressure from a farmer is real. And so we want to utilize this. Like Dwayne's saying, I do think along the line of a futures rally comes with basis widening out because of the ability for the farmer to sell. And I think that's something we're going to have to deal with over and over again. A couple weeks ago, I think it was, we had a processor in southern Minnesota make a push for basis, needed 500,000 acres of corn, pushed the basis by 10 cents, and that was used up in a matter of 2 hours. And so I think that's what you're seeing is that if a processor can move their basis 10 cents and get 500,000 bushels from farmers, I think that's what we're going to have to see moving forward. So that's why we moved on some old crop marketing. I'm also, you're not going to have any differences, I think, between Dwayne and I this entire conversation. I also am sticking to my plan for corn marketing for new crop corn. 487 is our target for new crop corn. I really think that we're going to move aggressive at that point. So let's talk about, where we see interest rates, where we see carry. I mean, if we're 487, there's a good chance, pending without a disaster, that you can get to a $5 futures point for January delivery with that carry to March. And so we're going to utilize that target. We're going to move on some marketing if we can get there, just because it's really important to make sure and try and get to that $5 mark. If you're unhappy with that price, if it's below your break even, there's things you can do in an account to give you downside with topside. But to be honest, our preferred strategy is probably going to be looking at getting some HTAs. We've also had multiple conversations with producers right now that have bankers knocking on their doors and being a little bit checking in a little bit more often than they have the last couple of years. And so to have those sales on the book, I think would be a great thing for farmers. Right now, where bankers are kind of doing cash flow, it's a lot lower prices, which when you're doing risk management is probably the thing to do. But if you can get some of those HTAs, those actual firm sales on there, that's going to help you with some operating issues down the road as well.
Yeah.
If I can keep jumping with this, Jesse, I love this conversation here. Yeah. Really, okay, so if we plug in the 90.3 million acres that USDA put out there today, adjust last year's stocks a little bit lower, you're still looking at about a 2.1 billion for a new crop ending stock, about the same as this year. So you're not crazy bullish, guys. When I say guys, I'm talking to any and all producers out there. The great bull run is more than likely over. And I hope Christy can argue with me, because it makes for a better show and tell me that, no, we're going to be $6 later. But to me, there's no reason to do that. In fact, my top end goal of 550, I'm kind of like, I don't know if that happens either. Now let's fast forward to June 30th. What if we find a few more acres? Like, I still have us at 92.5 million acres. And what if that crop goes in really well and the crop conditions are above average? We're looking at a yield of 182. Well, then ending stocks are 2.5, and we could still be below $4 come fall. So to Christy's point, we got to be very aggressive marketers, I think, especially the corn market moving forward this year. We're not looking at $6 corn anymore. If you can make $100 an acre, I think you got to do it. And with the lower fertilizer costs, I know these prices aren't what farmers saw the last couple of years, but these should be pretty profitable levels, I think. And to Christy's point, I think before we went on, the market doesn't care if you're profitable or not. I had to mention that to a few cattle producers this week too, that they don't care if your cattle break even or not. The market doesn't anyway.
Well, I want to ask you both here, soybeans, and as we're looking at the grain stocks numbers on our video feed too, I guess here's my thought on beans. Did all the numbers, when it's all said and done, did it maybe cap us out for now at $12 on soybeans? What do you guys think? Christy, you want to take that first?
Yeah, I think that there's a natural resistance at $12 for soybeans right now for both old crop and new crop. It's kind of proved itself over this last little bit. And you also look at, where you can pick out some friendly information from stocks for corn. Yes, we have almost a billion bushel more corn on hand. Our usage is terrible right now when it comes to soybeans, and a lot of that has to do with export demand. Mm-hmm. So you're looking at USDA forecasting an export demand that is like trade war era demand. We just cannot get these beans out the door. Crush margin has been decent. We've crushed, for this last February, we had a record crush for the month of February. So those things are good, but crush can only make up so much at this point. The future is crush for the United States. I'm so excited to see it, especially when you just look kind of in this neck of the woods and into North Dakota and South Dakota. It's really fun to see the expansion, but right now we're dealing with a story that's just not really there. Could soybeans be a sleeping giant eventually if you see that shift in acreage or saying, hey, I'm with Dwayne, you could have maybe seen some more bean acres out of this report if you're going to have corn where it's at. So if you get to June 30th and they keep beans where they are and we're kind of into this hot and dry pattern, the forecast is set up to be more of a bean story right now. So the extended forecast is hot and dry by August. So you essentially get there. Trust an extended forecast for what you want. But a lot of these ag meteorologists are really calling for this strong La Nina to happen by the end of fall. And we know that would not be beneficial for soybeans. So maybe that's where you're at. But for the meantime, I feel like soybeans are just skating by and kind of keeping off the radar and not doing much at all.
All right, Dwayne, have we capped ourselves at $12 in beans for now? What do you think?
I don't know. Maybe a little bit. The only good thing is the funds are short right now going into a growing season. And with Christy's points, La Nina, we are forecasting that. And at these acres, we're not really looking at an ending stock that increases year over year, which I know is so far out. We're still looking around this 325 million bushels. So you get to August, I don't need us to be in a drought. I just need the market to think we might be in a drought where yield is 49 bushels instead of 51. And then all of a sudden our ending stock could be below 200. That's not where we end up because, our export demand would just tank. But all we need is that scare for a while. And then we're above 12. Now, boy, that's not a great marketing plan to say, hey, just wait till August and hopefully it works out all right. That's really a poor marketing plan. But I will say concentrate hard on selling the corn first. That's what I'm worried about. And if you let your beans run a little bit, I'm okay with that. So 12 is maybe a short-term ceiling for us, but I think we can punch through it this summer. I really do.
I agree with that. And you also look at, so many factors when you look at soybeans, the ability to continue to put more processing plants up there for beans. That's going to create this additional demand and it's going to continue to be there, which is really fun to see. And I would also agree with the fact that, you look at last year and we had an okay growing season. There was a lot of places that just did not get the moisture they needed. We were very, very hot all summer long, and we ended up with a record corn yield. We did not end up with a record bean yield. And so you can come in here and we just know that they've built such a drought tolerant genetics into corn. I don't think they're quite there right now in soybeans. So I think soybeans just don't have the ability to shake off the weather like corn does right now.
I'll throw this at you guys real quick on soybeans. We talk about crush expansion and some of that, great expansion we're seeing in the Northern Plains, for instance, but I don't feel like it's quite ready yet. So, I mean, is it realistically something that's going to help out this soybean market as we go through 24, or is that more of a 2025 story? What do you guys think?
No, I think it's partially already here now because you got more plants coming online and they're not going to go online and operate at half speed. They're going to go, I think USDA is too low on last year's crush demand, the old crop. And that should mean that with more expansion, even next year, our crush demand, I think, is higher than what the USDA forum is out there. So I hear your point. We're still waiting on this announcement that the GREET model will work and we're going to use more for aviation. And that's going to be huge when it does happen. It feels like it's a little further down the line, but I don't know. It's going to happen though. in my opinion, follow the money. There's just too much money being pushed into this. And I love what they did is they looked at our area up here and looked at our soybean basis and went, that's where we should build crush plants right there. And, thank God, because we could use it up here.
Yeah, I had this conversation, obviously I run this business with my brother-in-law, but before us was my dad. And so I still have these conversations, these great conversations with my dad. And when crush was really, this renewable diesel was such a hot topic in the beginning, I had great conversations with my dad because I was like, I don't believe it, this isn't, me. And he said, I think if you could have seen the expansion of ethanol, you would feel differently. And he's like, with ethanol, everyone fought it. You were the people that were for ethanol were literally farmers and people that back farmers. When you look at renewable diesel, it's such a push right now. And not only that, you have big oil that fought ethanol for so long, want to be a part of this market. Almost every new crush facility plant going up is co-owned by a big oil firm, so they can utilize it, so they can have their fingers in it. And the tax benefits from renewable diesel that are out there for big oil right now are huge, like absolutely ridiculously huge. And so I think that as much as you wrap your mind around and be like, how is that even feasible? I think that it's going to work just because of the money. Like you said, follow the money. It's there to entice people to get it going and make it work regardless.
I'm trying to find something for you two to argue about. We haven't got there yet.
I know it usually makes for a better episode, but we're just crushing it. That's our problem.
I just haven't found something for you two to argue about yet, but maybe I will yet here. We're talking with Dwayne Bussey from Bolt Marketing and Christy Van On Sheeseth with Van On and Company. Dwayne, Christy, let's talk just your risk management thoughts in grains. I do want to touch on livestock. I don't want to forget about our cattle and hog producers, but just in grains real quick, your overall risk management thoughts here going through a holiday weekend into the spring planting season. Anything changed or anything you just want to really reiterate to folks with what they need to think about? Dwayne, you want to start?
Yeah, I think I had a producer nail it that called me about an hour ago, and we just talked over how this changed, and not that I changed our new crop marketing plan, that I just think it's realistic now. And he agreed with that. He said, so I think this year when we're sitting our butts in the tractor cab and planting, we're going to have to be aggressive, aren't we? We can't just ignore it. And I said, absolutely. Because I'm really big on, at least right now anyway, I mean, we got to digest these numbers some more, but really big on feeling like I want to be 100% sold, or at least hedged or somehow, some way before June 30th. I'm just worried these acres come back into play. The only way you lose that many principal crop acres is if it's horribly high prevent plant. And that's a curse word in my office. I hate prevent plant from the crop insurance side, from the farm side. So I hope that doesn't happen. I don't think it's going to happen. I mean, the snowstorm we had wasn't nearly as bad. So yeah, I think we're going to be marketing in the spring. And again, I'm concentrating too much on the corn market here, but I am just a little bit more friendly soybeans. That I think that's a tighter window. Our ending stocks are just a little bit tighter. Our stocks to use ratio is tighter. If we have a La Nina, or even if we just talk about it, I think soybeans could have a little bit more of a pop. So, but boy, again, the great bull run is over. Don't sit around and just think you can wait till fall and get $6 corn. I hope I'm wrong, but I don't think I'm going to be.
All right. Christy, your thoughts?
Yeah, this might be a hot topic, but I think one of my biggest concerns right now is I have a lot of questions how an election year pulls into grain marketing, and that there's a lot of conceptions out there that election years make higher grain prices, and I don't see that correlation. So you can pick out some years, but those years that you see the run with an election do come with crop failure problems on the production side. So I think one of my biggest concerns I have right now is that don't feed into these little stories that tell you, hey, there's more to come. This could happen. Or if we saw this could happen. What we do know is that USDA is forecasting, again, for lower profitability for farmers. What we do know is interest rates are very high. What we do know is that bankers are tightening up things for farmers. We also have the conversations I had this spring about rent prices going up. I feel for so many of these guys that had rent contracts due. Those went up. You're having all these land sales come up that are increasing. There's a lot of risk on the table for a farmer. It is not a bad thing to be looking at a market and saying, I can make money. Maybe it's not great, but I can make money here. And I think that has to be your mentality this year. Not that you have to let everything go and just say, hey, this is it, we're doom and gloom, but to make those wise business decisions for yourself. And then, you know what? Something happens, great. Utilize the futures board, utilize options to help you along the way, but just make sure you're doing something to cover that risk, because I'm just afraid, there's a lot of moving parts in this market that could not be a friend to the producer.
Along those same lines, Jesse, so if the producer's listening to us now and saying, well, I don't want to sell from 474 to 5.25 or whatever, I don't want to be as aggressive there, I want to make more, maybe that person has to buy courage calls then up above, buy the 530, 545, whatever you want, short dated new crop courage calls. That way they can feel like you still have upside, buy them June, July out for a time frame. It literally just gives you the courage to sell here, because then you still have upside. I hate it that we sound so bearish, but it's funny. We're all smiles today because I think we feel like we can actually get to these targets and sell it. But it's just still back to, it's a gift here. I really think if this market runs, and now back to the funds, I've talked to them about them a lot, but they've never been short the corn or soybean market the entire year, calendar year. There's always first, but I'm hoping this is enough, maybe mix in some Iowa drought, and then we'll send out on social media the 2012 pictures and say it's this year like we always do and get the market fired up, and then we can rally and sell it. So I'm rambling here, but I am agreeing with everything.
Yeah, I would agree with the managed money comment too. When you look at it, managed money is really short, and especially when you look at soybeans, they don't actually like to be short soybeans very often.
No.
Like their period of short came in the trade war era. Otherwise, they really have no desire to be there. And I think that when they see the future of crush margin, they're not going to want to be all that short beans either. So there are very friendly dynamics. Like sometimes I feel like I have to like throw out like a bold thing just so people would listen to me and not be like, Christy always talks negative, because I don't want to be there, but my job is risk management. But there are friendly atmospheres around this market to get this market up and going and really give it that ability to get to some important price counts. Like Dwayne said, if you don't want to be selling here, we went after some long put short calls. It's marginable, right? If this market runs, you're going to be having us call you, hey, you're on margin again. So that's never fun, but there's ways to protect it if you're not willing to sell at this point, to give you some flexibility around this market. There's also, you can look at September options right now that get you all the way into the third week of August. You're going to know at that point whether you have a disaster crop or not. So there's ways to utilize it. Just don't completely fall blind to a friendly concept and not do something along the way.
Don't be the producer that calls us come fall when we hit 395 on the board and say, yeah, what do I do here now? Don't be that
That's
person.
not fun. That's actually not fun for anyone. That's not fun for the farmer. That's not fun for us. My first year of grain marketing was 2009. And that was not a fun year to come in here, and I would have these conversations. And once again, I would talk to my dad about it, and I'd be like, this guy just said that cash price is this price, and that's $1.40 under his break even. He has 7 days to price his grain. I'm wondering what I should do here. And so don't get yourself into that predicament, because you could take the cash in hand and really utilize the board to give you some more time so you're not forced to make that sale. Make that sale be your decision, not somebody else's decision.
Yeah. And don't be afraid to make money. You don't feel guilty making money. Man,
I'm just sitting back and learning here.
Oh, Jesse, you're here.
I am here. You guys just keep on running with this. I gotta ask real quick, just as we kind of wrap things up. This has been awesome. I don't want to shortchange our livestock folks, so I just want a couple comments there. I know hogs and feeders were kind of mixed on Thursday. Live cattle found a bid. Hogs and pigs numbers out Thursday afternoon, pretty much in line. I think the all hogs and pigs inventory was up 1% on the day, or on the report, I should say. And then, of course, we got bird flu and dairy cattle. That was the story of the week. So any thoughts from either of you in terms of the protein markets as a whole? Anything to think about through the holiday weekend? Dwayne, you want to start?
Well, you're going to feel a little crazy that you opened up this box now, because I could talk another 25 minutes on the cattle market alone this week. I mean, what a crazy week, right? Okay, negative cattle on feed report, the bird flu thing. the phone just gets lit up here then, and guys wanting to know facts, and they of course go on social media and think that they've learned facts, that it can't do this, it can't do that. It doesn't matter. What mattered in the cattle market is the funds are long, and really before these two negative reports, to me, they looked like they were tired of being long. They just weren't buying like they were last year when we ran it up. What matters about bird flu and cattle and feed report is it created uncertainty. And if you're a fund that's a managed fund that's been long this market and you're up money and you're uncertain about something, what do you want to do before a holiday week? You want to get out, take your money, run. That's what we had earlier in the week. Now, I love the way it closed on Thursday because there was buying in the back months, looking out, and so also too, the cattle and feed report and the bird flu, both are basically paper reports, right? Did we have more cattle to kill this week now? No. Have we increased the herd size? No. So it's still a bullish situation longer term, but we got to concentrate on those darn funds again. I keep mentioning, but they're crazy important. If they don't want to be long, this market will go down. So I'm looking at more hedge, more risk management things, a lot of LRP out there for next year's calves because they can lock in the exact same price. I think come fall, we could be right back up to these price levels, but I'm just worried the short-term top is in. So there you go. I only talked for like 10 minutes on cattle there. Sorry, Christy.
No, you're good. I'm not going to add much on cattle. I will say, I hope no one ever just says I'm a broker because, and pushing ideas, because this is a prime example. I think LRP is a fantastic product for cattle right now. That has nothing to do with me. That benefits me in no way. I think that's great. And I think that's something producers should be looking into. You covered enough on cattle. I look at pigs and I'm afraid that hogs are going to be one wild ride all year long. So you look at it right now and seasonally we get to the top close around this for the hog market. Also, we're at 2 standard deviations away from trend line for hogs. So I know that sounds like a bunch of garbage coming out of my mouth, but what it is telling you is if you think about like a bell curve chart that you grew up learning in school, those edges that just don't have a whole lot of probability of happening, you can put that on the chart. And that's where we're at right now, is that there's not a whole lot of probability for the hog markets to extend themselves much further than 2 standard deviations away from trend line. So you're sitting here at these really high levels. Seasonally, you top around this. I get nervous about hogs personally. It's a pretty neutral report for hogs and pigs. Mm-hmm. You can maybe pick out a little bit of negativity, not enough to like scream it by any means, but it does feel a little bit toppy to me when you look at the hog market. But I do think it's going to have its moments, and if you're a hog producer, strap in, because I think it's going to be quite, at least this summer, I think you're going to be having those days where you're like, what is going on? And it's going to be whiplash.
I got a question for Christy, if you don't mind me jumping in the host chair here, Jesse.
Please.
Exports this last week for pork, very good, 55,000. They've been huge for a while now. But this is happening as China is reducing their herd size and telling us they're going to continue to reduce it. It feels like global demand is good. It all just kind of confuses me, and I'm not much in the hog industry. That's why I'm just going to sit back and ask you questions about it.
Yeah, and I think that's exactly it. That's why I talk about that wild ride, is the demand's there. I mean, I think exports were up like 64% this week. And so you have it there. China has said that their hog herd is too big. We got to take that with a grain of salt. We know the information we get from them is sometimes not reliable, but our demand that we've been seeing has been coming from all over, and it's been really great to see that demand show up. And you're also looking at, coming into grilling season, you're still having a benefit of saying, hey, if we're going to start tightening up the economy, if we're going to start seeing, which, you see the Dow. So I'm not saying that's happening, but if you start to see people complain about food prices, right? And that is what's happening. You're having people talk about how expensive everything is. If you're going to do that, I do think that pork is going to be pretty popular this summer, saying, hey, I can get a good chunk of meat a lot cheaper than I can beef right now. And so do I think that it's going to completely take over? No, but I look at a lot of places that aren't in the Midwest, that aren't necessarily completely beef people, and I think that that's going to steal the show for some people. So I think the demand is friendly. I just get so nervous when you look at seasonals and the charts. So that's why I really think this whole year long, you're going to be just up and down based on a lot of different information tugging you in both ways.
Well, thank you both for letting me be on Market Talk with you today. I
This
really
has been great.
appreciate
This has been super fun.
No, this has been awesome. I'd say we probably need to mark down June 30th for the next big set of USDA reports to do this again with this same group. Final thoughts? Anything else we haven't covered? I think we've covered enough, but anything else that we haven't mentioned that's on your guys' minds real quick?
Just real quick summary from me is just this is a year to have a marketing plan. I know you could not have a market plan the last couple of years in row crops and do just fine, but it's time to be a hedger again, have marketing plans, take the holiday weekend to put something down and put some reminders, actually even better, put sales targets out there on corn and don't do the cancel if close order. I've done it myself too. Don't do that. Just leave them out there and be happy making money.
Christy?
Yeah, I would say anything, if you don't like what we're saying, right? If you're like, these Debbie Downers need to just go away, that's fine, right? Everyone's allowed to have their opinion, but put a line in the sand. So let's say, hey, you know what? I'm going to let corn run. We're well off of our lows, but I'm going to say, hey, if we go back and test the lows, I'm dumping my corn, right? Put that line in the sand. Same with the new crop corn, and say, I'm willing to just ignore it unless it gets to this point, and then I am going to wash my hands of it and walk away. And that gives you the ability to be bullish, but responsibly bullish moving forward.
All right. Well, great stuff. This has been awesome. I know if folks have questions, they could reach out to both of you. Dwayne, how can they get a hold of you?
Yeah, they can call us here directly, 605-448-2365, or they can check us out online at boltmarketingllc.com.
And Christy, how about you?
You can call us at 1-800-648-5494. Otherwise, you can reach us at www.vanonco.com.
Dwayne Bussey with Bolt Marketing, Christy Van On Sheeseth with Van On and Company. Thank you both for joining us here on Market Talk to recap the USDA Fund. This has been awesome. Really appreciate it. And hope both of you have a great weekend, and we will talk to you again soon.
Thank you.
Thanks for having me.